Namaskar and good morning. Today I am back with you for discussing certain aspects of portfolio management. I am not saying that I am the best portfolio manager of my own portfolio. I don't manage anybody else's portfolio. But I do adopt certain techniques which have stood the test of time to some extent. I am successful to some extent, failure to some extent. As you all know, 2017 was a great year for most investors on the Indian bourses. 2018 was one of the worst years. 2017 was the best year, 18 was the worst year. Now, 2019 has started. It's reasonably well. The first indications are the Q3 results are coming, and the results are better than 2018. May not be as great as 2017, but they are likely to be very good. So that's the indication. Now, 2019 could be a good year for portfolio building. Now, how do you build portfolios? Everybody has his own pet formulae. I have my own. So, to a certain extent, I look for niche products and services. If a company is having a niche product or niche service, I take a good look at that company. Some of them do fail, but some of them succeed. Once they succeed very well. If a product, a niche product or a niche service succeeds well, it is likely to expand well, it is likely to be a great star. But if the management is not very great, then even with a niche product, even with a successful product, they may not be able to expand well. There are cases like that. Now, scalability. Niche product is one thing, but a niche product must be useful for the whole world, or at least for the whole of India, or at least for a good big region. So, scalability is a criterion. Sales and profits will depend upon scalability. So, multi-bagger becomes a multi-bagger because of scalability only. So, if a company can go on expanding and go on selling all the products that it is manufacturing, then it can become a multi-bagger. Then price earning ratio. Price earning ratio should be reasonable. Maybe less than 20. Many are now less than 10. A good time to buy. If 2019 gives us good political results, then we can see price earning ratios like 2017, that is 20, 30, 40 also. So, when price earnings are less than 10, go and grab good shares. Now, how you maintain your portfolio depends upon your portfolio size also. Maybe your portfolio may be of the size of 1 lakh, 10 lakhs, 50 lakhs, 1 crore, 1.5 crores, 2 crores, goes on. It depends upon your, whatever it is, whatever be the size. The majority of your portfolio, that is, say, let us say 80% should consist of a maximum of 20 shares, minimum of 10 shares, optimum 15 shares. You may have some odd shares with say 10% of your portfolio just for trying, just for remembering. say 100 shares or 500 shares of this or that assorted companies, that should be limited to about 10% or even less than that. But 90% of your portfolio should consist of shares, good shares on which you can depend. What does it mean? So, if there are about 10 shares, or 15 shares, or 20 shares maximum, a share should occupy 5 to 10% of your portfolio amount. 5%. See, if you have 20 good shares, 5% is the maximum amount you can put on a good share. 5% is the good share means minimum 5%. Now, good share means maximum 10%. Don't ever exceed 10%. That will save you many times. I also do exceed sometimes. No, why we exceed sometimes is you put in 5% only, but with time, the money, the portfolio value of the share goes up, say 100%, 200%, 300%. I have such shares. So then it becomes 20% of your portfolio also sometimes, you can't help it. But when you invest, your investment worth should be 5% to 10%, never exceed that. Now let us go through a few, not all, a few of my portfolio choices. One of them is IndusInd Bank. I am having this. I had about 5,000 shares of Indian Bank about 7-8 years back. Now, for various domestic contingencies, I have sold all of them. Just for the sake of remembrance, I am keeping 300. It's a good share. Will I buy now? I don't think so. If there are better ones, why will I go for IndusInd Bank now? In banking, I am having only IndusInd Bank. The other banks which you can probably have, maybe Kotak Mahindra Bank and Yes Bank. Among these three banks, you can just go on looking at. They are dependable banks. See, you need dependable shares also, some spectacular shares also. IndusInd Bank is a dependable bank. It doesn't go down below a certain level. It had gone to 300% and odd in my portfolio, 300% appreciation. Now it has come down to 255%. Then Giant Agro Organic. Now, why did I go for IndusInd Bank? Dependable management, let me tell you. Conservative management, but dependable management. Unlike some other banks, spectacular managements, but not dependable. IndusInd Bank is a dependable management. HDFC Bank is a dependable management. Okay, the next one is Giant Agro Organics. A small amount I am keeping. That the original one was I have sold. The bonus shares 1:1 they have given, that I am retaining. It has got a niche product. It came up to a certain level, but now it is struggling. Now, when it finds new applications, probably Giant Agro Organics could shine. Let us see. If it shines, I will buy more. But till then, I will just keep my bonus shares. Future Retail. Future Retail belongs to the future group of Kishore Biyani, and Kishore Biyani is a very ambitious businessman, and his star company is Future Retail. There are other good companies in his stable, like Future Consumer, Future Enterprises, so and so. But I have opted for Future Retail. It is growing well. It had given me 150% appreciation. Now it has come down to 70%. But I have not sold off because it's a matter of time only. You see, 150 it has gone in 2017. 70% it has come down in 2018. Now it may go up in 2019. but it is growing. Operational results, that's what I am bothered about. Not about the price factor. Operational results are reasonably good. Its results have not yet come for Q3. But I do expect it to be good. The next one is India Bulls Ventures. India Bulls Ventures belongs to the India Bulls Group, and it is succeeding well. India Bulls Group, two, three companies are succeeding well. India Bulls Enterprises and India Bulls Ventures, both are succeeding well. I have opted for India Bulls Ventures because I find it is consistently expanding. Sometimes the results may not be that great, but generally very good. Will it be a multi-bagger all the time? I cannot say that. Maybe in 2 years' time it can be a multi-bagger, but 30%, 40% appreciation is coming regularly. So there is no problem. So India Bulls Ventures also expandability, scale, if you look at that, it is good. Price earning ratio is high. So there it fails. It is around 40%. But expansion, continuous expansion. Unlike many other companies, this one is having continuous expansion. Then, okay, let us look at Vakrangi. Vakrangi I had purchased right up to the level of 550 before the various rumors struck Vakrangi like lightning. From 550 it has come down to 250, 250 to 150, 152 and down below. Around 150 I had sold off. I became wary of all these rumors, whether there will be some truth in them, something like that. And anyway, it was not wise to lose money. I didn't lose much money anyway. My average purchase price was something like 200. I sold off at around 150, something like that. Incurred some loss. It's okay. But I think I have made up the loss by buying at the level of 40. Again, I am buying. And now it's around 50. It went up to 53 and it is coming down to 45, something like that. Now, why am I keeping that? Will I go and buy further? Maybe I might. I am not very sure about that. I might, I may not, because it's already more than that 5% limit of my portfolio. Therefore, I may not buy. But if I don't buy any, if I don't find anything better than that, I might buy, or I might keep it static. I cannot say. But India, look at the prospects of Vakrangi. Vakrangi, just with a few hundreds or maybe 1,000 of its kendras working, it produces a small profit. Remember, it is a small profit. That's matter. It's not loss. Now this time it's going to be around 3,000, 4,000 kendras. Next maybe about 10,000 kendras. And next maybe about 20,000. And next 45,000. So as the number of functional kendras increases, Vakrangi's profitability will also rise. It's not going to run into loss. With 1,000, if it can run in profit, with 10,000 it will run in better profit. It's not running in loss. I am emphasizing again and again. And profits will increase as the kendras will become more and more functional. So after 1 year, when all the kendras are fully functional, I think Vakrangi will be quite good. It may not reach the profitability levels of the olden days, but it will be profitable. If not 550 price, it may come to 250 price or say 150. Even at the level of 150 price, when it is fully functional, from current levels, it would given you 300% appreciation, 200% profit, a good multi-bagger. It's all our estimation only. So I'm keeping it. Mangalam Organics. Mangalam Organics also is a niche product. To my knowledge, only two companies are there, Mangalam Organics and Kanchi Karpuram. Kanchi Karpuram was eminently successful, and then came Mangalam Organics, that also became eminently successful. Now, most likely, Mangalam Organics can overtake Kanchi Karpuram. Possibility is there, but or both may run simultaneously. But Mangalam Organics seems to be a better company compared to Kanchi Karpuram. Both are good, both are very good. Now, there the product needs to find more applications. It's a niche product, but it need the R&D is more, seems to be more at Mangalam Organics. So they may find more applications. Then Indian Hume, I just have a small lot. It's a pipes company. So it makes pipes, good pipes, and is also a good contractor. Huge contracts it's bagging. But what is the scale expandability? I'm not very sure. Therefore, I'm keeping a small. It was giving bonus shares also. Therefore, at that time I purchased, and then I sold off the original lot and keeping the bonus shares. Nowadays, it's a little sluggish. Then Pondy oxides. Pondy oxides is not a really niche product, but something like a niche product. It's making lead alloys, etc. from as a secondary smelter. Could expand a lot. Its expansion potential is across the world, so it could expand a lot. Now, Sadhana Nitro. Sadhana nitrobenzene. In India, at least, it's something like a niche product. It is giving good results. Current results also could be good. If not current result, at least next result will be very good. Likely to be very good. See, my prediction is as good as your prediction. But Sadhana Nitro, something like a niche product, expandability is good. Therefore, Sadhana Nitro seems to be a good bet for long-term portfolios. Phillips Carbon, reasonably a good bet, but carbon shares are presently not having a good time. They are producing good results, but market sentiment is not good. World over, the problem of raw material availability is there. That I think for Phillips Carbon is not having that much of a problem, but let us see. The other shares that I am having are small in number, and I go on shuffling them periodically. Today I might buy, and within 2-3 days, if the result is not good, I might sell it off. So other things are not so very important. Why I said all this is portfolio management is essential. You look for niche products, look for expandability of the scale, look for reasonable price earning. Ensure that you don't buy too much of anything. Too low, okay, but too high, not okay. Too low, why it comes sometimes? If you adopt a SIP method, systematic investment plan. So every month some amount you go on expanding, but never go beyond 10% of your portfolio size for any particular SIP. 5% is good. Thanks for listening. I'll be back with you with a good share very shortly.